General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Knock this out. It's starting to get cold in the middle of the week. Yeah, that is true. Mm-hmm. This was week 1. Engage days 0. All right. Why is this way down here? That don't make sense. Okay, so that's wrong. Okay. Today's the 5th. Yeah, Bitcoin going crazy. Yeah. This is everything's tentative. What do we have? Unemployment. Okay. The ECB is talking, so that's euro. We're waiting for that. Forex to do that too. ECB, are they doing anything important? They're just talking though. FOMC minutes, they're coming out Wednesday. Consumer sentiment. So NFP is the only thing. Unemployment is going to be dollar for later FOMC. Let me see if I could get a link of this or not. Nah, there's none. That's just more of that. Yeah, that don't work. And there's no COT because the government shut down. It's just the last one, 9/23. Man, this is fast. No COT. Dude, government shutdown. Fair watch. $96%. Yeah, they pricing in these rate cuts. Rate cuts are getting priced in. I think they already priced in. As long as we keep spending all this money as a country, you could just buy tech, metals, and crypto for a while. Maybe till Trump is out of office. Because we're spending a lot of money. See if we got earnings. Because we ain't got no kind of news. At this point, we hoping for news. It's like, please be something. All right, we got Nike. Something this. It's not gonna move the market. Got nothing. No top 10 companies report earnings from the NASDAQ. This week. See sentiment. We're bullish. Let's see here. 42% bullish. A little bit more than last week. Bearish sentiment is still the same. One thing do I have some notes somewhere? This. The last COT data, commercials were heavy short. Remember that. So if I think about that, did they offload their positions? Because you offset below lows. We we ain't do that. These dips ain't dipping like they want you to think they dipping. So here, they took off a bunch. They was offsetting last week, and they was adding. They was adding on longs, more longs than short. And this was for cotton. They were heavy short. They didn't offset all those short positions yet. You can tell by the weekly chart. We didn't take any significant sell side liquidity. Okay. Let's get some daily charts. Let's just get some. Since I had to do layouts, the only thing I'm not doing is those those projections on NASDAQ. That took way too long. I'll take this off. Okay. I do like this chart. And then those are my dailies. Yep. Let's go over here. No, that's CB. Let's go over here. Okay. I can deal with that. Yep. I'm gonna have to do that again. I'll do it later though. I just have the fib here to remind me to do it. Okay, let's get this done. Bitcoin's going crazy. Hold on 1 second. We're gonna cook. Let me get some coffee. I got cold. Alright, let's go. We bullish on the monthly. There. We're so close to 25. I mean, we do have a round number. 500. This candle just started. So this previous month's range. We're at all-time high, so I would say premium wick. Okay. This is all we got on the monthly. So current interval only. Current interval only. Our closest levels that I can keep on the chart, I'll say is previous month's high. And this will be August. August premium wick. We'll just give them these colors, just so it's kind of organized. Okay, keep note of that. Round number. Next discount, all right, it's the August premium wick. Six. That 2,500 is probably somewhere up there too. Weekly is bullish. We're taking highs. Barely did we close below? I feel like we did, or at that price. Either way, Monday, it's not really a trading day. Our next premium rate would be previous week's high. We had all-time high. Let's see what didn't get hit on the discount side of things. Looks like we have us a gap here. Tiny gap. When we're trading at all-time highs too, so down candle close price. Which we used already. So let's go with untapped. You can start buying them down candle or down candle open prices. No, these are close prices. These down candle close prices, you can buy these. Price close above. Yeah, it's because that's how commercials make money. That's it though. It's a weekly fair value gap. Previous week's high. Just a weekly fair value gap. All right. Daily bullish. Mm, it will be that high as well too. You could say, oh, but it's really just the previous day's high, which is the same as previous week's high, because Friday was the high of the week. The same. What we got on the discount side? We had an imbalance, but it got dealt with. It's already been mitigated. So, but we do have a volume imbalance down here. That's the date range. Where's the price range? Let's get the color right. It's a daily volume imbalance here. Let's look at this. Stage 4. Can I put text on this or no? Oh, they put it right here. Let's make it white. See if I can see it. Can I anchor it somewhere? Like that. Info, price range. Hold on. What does this look? Okay, yeah, that's not gonna work. I'm not gonna do that. Yeah, take that off. I just have to know what that is. Yeah. Stage 4 is bullish. What do we have here? We took liquidity here. So we have us H4 order block here. This should be the row, but this was the last push. I can't give it the whole row personally, just because of how this ran up. I have to give it this candle. I have to be Pacific, and we right next to this. Bearish for fair value gap. It's the immediate. We kind of sitting in this. You could say this low. Here's a rejection block because this took liquidity. We're already here. This flat bottom has my attention. Ain't got no flat top, flat bottom. What color am I at now? I'm at yellow. Okay. All right, let's hit this H1. We got all the key levels. Okay, let's see. We got up here, it's an old low we broke right here. See, you can say this is an old mitigation block. It's kind of tacky though. This old low's it's more important because it did cause that kind of like this would be the bearish breaker zone if we're really gonna sell off. You can even frame this push up here as a zone or this push up here as a zone. This is interesting as well. We used this. This was like confirmation of the sale. I definitely wouldn't want to see this would be like an invalidation point. Because we already ran it. Ran, break. It's like a breaker. Broke through this low and we broke through this low. So as far as just lines of defense, I'm watching this. I already got this fair value gap. And then I'll watch this. Minus OB. It's BB. It's a bearish breaker. All right, what do we have here? We have a H1 fair value gap pair with the volume imbalance on a higher time frame. We're kind of sitting here at this breaker, but it looks like we're disrespecting it. Oh, super respecting it right now. But I would want to see this hold, and it's right at EQ. This would be the final area just because this was the order block that took liquidity. And then this would be like the killing ground. Right now we're bullish. We would want to buy and discount, probably somewhere down here. So maybe sell to buy. Best possible price would be previous week's low, but we shouldn't hit it. It should be here. Give me an OTE. This is OTE right here. Where's the coordinates? 23461. That's what that is. 23461. And then the 234,531.72. That's what that is. Exactly. Perfect. Two, 4,631, 24531. And this is Wednesday. Boom. No. OTE. All right, that's what we got. Now let's go back here. This is perfect. Now for here, I need 9 weeks worth of days. So let's go to the week and knock out 9. Which, if I remember, it's just the second line. 1, 2, 3, 4, 5, 6, 7, 8. Boom. Okay. What do we have here? For the most part, this August premium wick, we really don't need anything. Everything's here. This is the main thing, and this is our main range. It's the daily start of this delivery. September don't look that efficient, do it? From the daily perspective, but just this push up. Like, we don't have down candles here. We don't have down candles here. It's a void. It's like to truly rebalance, we need to come down here. This be the gray pool. Is it too gray? I just be guessing on inefficiency. Like, yo, it'll get there. So, here. Then I'll do all the notes here in a second. Do just like this, cause I still gotta do the other three. All right, give me a second. That coffee's way too delicious. Let me just double check this hour chart. I think I'm done with this. Yeah. Above here is this and this, but this is the main thing. Yeah. Low resistance. What's the daily volume imbalance? This is lots and lots and lots of confluence. Let's do silver. Hold on, before I forget, I gotta do this on the daily too. Hold on, this one. Nope, wrong, but yeah. Yep, this is it. So yeah, missing tool, and then over here I have this. Is this not saving my drawings, or what's going on? And this will have me all the way together. All right. No. I know what this is. It's the wrong layout. It's this layout. There we go. Now, there we go. This thing kind of do look weird. The actual contract, not the continuous contract. Everything's doing the same thing. This must just be a Nasdaq thing. Go crazy, pull back, keep going crazy. When the last time we did this? Matter of fact, this might give you some insight. Did we come all the way back? No. Like we came to like this 2-3, which is this right here. What is this? 24840. Strong pull back here. It do kind of make sense. All right, I digressed. Go back to silver. Monthly's bullish. got on the monthly at all time high. That's it. That's all we got. What is all this down here? Which is 49. And then what we got, what we don't have, that we got previous month high. You got to use the raise on this. This a long chart. Look at this market maker buy model. When it start? $17. Shout out to people in 2020 who bought silver at $11. So our next premium array is the all-time high, and our next discount array is previous month's high. Let's go to the week. Oh, okay, 'cause that's how it's anchored. It's okay if it's anchored like that. This still previous month's high. It's a key level. Here we have, is this a volume imbalance as well? To a weekly fair value gap. And previous week's high. Previous week's high. And put this on a weekly color. Alright, cool. That's a huge weekly fair value gap. The daily, previous week's high and previous day's high is the same thing. Next on the, Control Z. Okay, that's perfect. Next on the daily, we have us a gap as well. It's not untapped. We have us a fresh one here. Remember what was it? If you got two volume imbalances in between, it's a suspension block. I was gonna try to code an indicator for that too. Let me see if Fadi did it. Fadi already probably did it. Suspension. Somebody's fast. Thanks. Add midline. I used to change the text from white to another. This is the correct. It must be the FUG between two volume imbalances. Yeah. Oh, he did it. He did it between two fair value gaps. You slipping, bro. You slipping. All right, I don't see a suspension block, and I don't want to look for it. The next thing is this, though, but I want to get us a fresh level. It's just this one is so tiny. And this whole liquidity void just in itself is inefficient. We don't have no down candles. here at all. Okay. Oh yeah, don't forget to do the 9 weeks before I go. Here. So we have bullish weekly. On the week, it was just previous week's high. It's like that other one already. Yeah, we already smacked it. Then for the discount, it was a weekly fair value gap. And the daily was bullish too. We just had previous day high. And then we had the daily liquidity void. And the H4. Still super bullish. I don't see anything that stands out like within this accumulation range here. And all-time high is just right there. Yeah, just go and get it. Yeah, I don't see no discount rate. It's just bullish. Our only real discount rate is previous week's low. It's previous day high for bearish rate and previous week's low for discount rate. Like that's the major liquidity pool because it's paired with the. Let's see if I can use this color. Previous week's low. That's the intermediate term low too. So if we break that, that's a market structure break. All right. What in the world? That thing is loud, whatever that is. This is not an order block. We don't have any old lows above us. We do got the old high already marked. Rejection block we don't have. No real bearish order blocks. No bearish fair value gaps. No liquidity voids. No breakers. No. Mm-hmm. We have us a bullish breaker here. Let's just go with the body. Okay, yep, that'll work. H1 bullish breaker block. We do have us a It's inversion. That's just way too huge too. I swear I'm like getting close. This should be a suspension block because this different. This open close price. This open close price. Like this candle should be a suspension block. And look how it worked. The dude did. He did like the middle candle. No, like three fair value gaps and picking the middle fair value gap. So this will be his suspension block. Hold up. All right, keep the chart like this. Okay. If that's not the suspension block, yep, no, because then it's gonna be like 1, 2, 3, 1, 2, 3. You just have to go. That'll be a suspension block. Like it'll be too many. It's subjective. It has to be a volume imbalance. It can't be fair value gap. It doesn't work like that. You might as well say just the fair value gap then. If they do have to make that code available, I could have probably worked with it. See here, it'll be this breaker block and then this old low, just previous day's low. I swear this is one though, just because this looks like a volume imbalance. Okay. Yeah, I'll grab this. It's my last magic trick. That's a fair value gap. Because we could get us OT over here too. And I want to see what lines up. The only thing that really lines up is this low. All right, got the kilograms laid out. And we got to post this one from this point of view. Just the last time we broke a high here. This is the last high broken. Nope, we broke this one. 3 bar swing high here. We broke that one. From here to here and then here to here. We didn't do anything here. We broke this high. Just my range. Yep, just from here to here. I don't need no markings nowhere else. If we break down below here, then we should be bearish and start looking, and then I care less about this side. It should be a quarterly shift or something coming up too. Hold on, wait, Control Z. Okay, hold on a second. I had to take a few breaks, but okay. So this is done. All right, so now I'm on EU. It's cold, and I just made some green tea. That's cold with lemon. Let me double check this for yeah. OTE down here. Open anyway. Monthly. Monthly be bullish. What's next on the monthly? It's got a previous month high, really. Yeah, interesting. Then previous month's low. This is interesting. So this is really like a monthly engineer liquidity. What if you get like a cool little monthly CRT? Hold up. What do we have on the weekly? It's neutral, but overall, we still bullish. Man, and all we really have is previous week's high. And it was an inside week. Um, how should I box? Can I put this in a box or something? Let's see what this look like. Let's go here. Let's go here first. I just want to see how tacky is it. So this is really just the last 2 weeks price action right here. Let's do wow. So this is a week with the inside week. Let me do just this week here, this down week. This is a weird chart, but this is where we at in price. So this the first inside? Yeah. So I'm gonna just call this the parent bar. Parent bar. parent bar high. And this would be parent bar low. Parent bar low. That's interesting. While I'm here, let me do this 9-week thing. 1, 2, 3, 4, 6, 7, 8, 9. Let me count. All right. Let's go to the daily. Bullish. As far as a raise, we really just got these ranges, but I think this kind of sticks out for me. Just let me put this in like a box. This, I'm trying to design this and put a border on it or something. And give me a middle line. We'll do yellow. And I want this candle from that open price. Can I get the body of this? This is a consolidation low. Yeah, that'll work. Where's the size of this text though? Oh yeah, and spell this right. There we go, and maybe 12. Okay, that's not better. We have all-time high. We really don't have no arrays here. So for the daily, still bullish. Let's get some 3-day look backs. 1, 2, 3. 1, 2, 3. No. So this will be our initial range going into the week. Friday, Thursday, it's Wednesday. And this is Thursday low. So our closest low-hanging fruits would be Wednesday high for a buy, Thursday low for a sell. Let's look at the H4. Okay, we got some equal highs up here. I like that equal high indicator. It's clean, crispy, not too much. We don't have too much here. H4. Look at this range from this kind of the range that we're stuck in. It's a beautiful zone. I almost kind of wish I used these type of zones. Note to self, yellow looks good. Man, that looks amazing. Mm, don't really see no inefficiencies to rebalance. We're just in this range. These are my extremes. We can play back to the EQ if we want to scalp or paper trade. This would be fun to paper trade just to practice. Uh, and this will be the layout here. So H4 trap order flow really. Our next bullish PD array is Wednesday high still. And our next pair is Thursday low. All right, this is what we got here. All right, let's see what we got above price. This is what we sold off last time. We wicked it. We have this rejection block here. No, it's not H4, it's H1. I would say we have us a breaker here. Or order block. Our breaker will be here for the bull side. You don't really have kind of use this gap. You can say this is like a propulsion block we pushed down. Looks like we came back here. It's even just grabbing this candle. CSD, we never came back. Oh yeah, we did right here. CSD, tap, go, never come back. This inversion fair value gap that we used, we should hold that. The last level I would look at is just this down candle. We have this engineered liquidity here. This is interesting. I would look for sales, especially if we run this, use this rejection block, or even pair liquidity up here for a sale, because this is going to bounce. FUG, I think it's a little I. I don't know why they be putting it like that, but that's what the ICT people do it. Whoever invented that, shout out to you, because that's pretty slick. I want to see what broke. This is below the weekly open. One bullish rejection block. Yeah, I think it's gonna be more sensitive than that. We already tapped this. This is a level that we already tapped. We already tapped both of these. These are the real levels that we're looking at, these rejection blocks. especially while we in consolidation market profile. Let's scoot these back since they're going to be a little bit less important since they already been mitigated. This one has been mitigated. After this one has been validated, this one's fresh. We cut through candles. We don't care about fresh levels. See, I can hear ICT in my head. All right. So boom, this is where we at for the daily. This is where we at for the 9 weeks. Okay. Let's get these notes. Making new all-time highs. Looking for fair value areas to buy. Last anchor point is being retested at the old all-time high. If this breaks, we can look for sales. Distorted price alignment. Government shutdown. So all we get is unemployment this week and FOMC notes. Be watching the news for politics, war, government shutdown, and spending for gold and silver. Set up influence, engage more. It's not week one no more. Think bread and butter. And low hanging fruit. Partials. And leaving runners. It's uncertain conditions of the current news cycle. Yeah. No, it's super close to all-time high. It needs to retrace, but I don't care. Know how we stand in premium of the expansion ranges. Or integration. Haven't retested any anchor points to confirm them. Price is one-sided. personal government spending so much money. Silver, gold, and Bitcoin is in buy and hold mode. Engage. Just buy. I like sales here too. Because we so far up. It's kind of scary with the government shutdown, but you just got to get in there. Notes, trapped order flow. Anchor point integration. Price has been stale. But this week, European Central Bank has a lot of talks Monday through Wednesday. You know what might be the exotics might be pop good because government shut down over here. We don't got no news. Exotics probably still got their news. Store the price alignment. Price is holding. Dollar is weak. Government shutdown. Will affect labor and make the dollar even weaker. Sideline. See a big break or some type of institutional order flow. Focus this week. See. Bread and butter. We don't have a clue what's going on with news. Journal intent, more case studies. Hunt plan, old school ICTs, old school ICT stuff that still works that people forgot about. Definitely bread and butter. Dang, that's low risk. But the government shut down. Wednesday, we do got news on Wednesday. I think it's Thursday. Not Wednesday. FOMC minutes. Will we get those? That's interesting. Oh, all right. I'm all caught up. I'm ready. Ready for Monday now. All right, y'all. Y'all have a good day. Peace.